Today we're going to talk about the top 3 things to avoid in a broker and how these things can really cost you money and eat away at your profits. Hey everyone, lead trainer with StocksToTrade, Tim Bowen here, back answering all of your questions, and as always, drop those questions in the comments. I read almost every one, and someone at StocksToTrade will read that question. We love to answer all of these, and subscribe and hit that alert bell. I really want you to hit the alert bell because we do a lot of these videos every week, and many of them are live. We're looking at the chart of the day, the stock of the day, building watch lists. So ring that bell so that you get notified and you can jump on those and catch them live. So as I mentioned, we're going to talk about the 3 things to avoid in a broker. The stockbrokers, you know, there's reputable ones, there's intermediary ones, there's really sketchy ones. And what I want to talk about is the 3 things you should be looking for to avoid, okay? Number 1, avoid brokers with ridiculous leverage. I think it's attractive to many new traders. You know, any trader or any brokerage account will give you 2-to-1, maybe 4-to-1 leverage, but if you're looking at a broker with 6-to-1, 10-to-1, even in the world of Forex, which I would recommend avoiding, you can get 100-to-1 leverage. As a new trader, as a growing trader, your goal is to make good trades, and you're gonna make mistakes. The simple fact is you're going to make mistakes. So you do not want to compound those with ridiculously high leverage. Now I know everybody wants to make the big money today, but if you're making mistakes, leverage cuts both ways. Because remember, leverage amplifies everything. Leverage amplifies your gains when you're right, but it amplifies your losses when you're wrong. So please avoid those brokers with ridiculously high leverage. Look for 2-to-1, 4-to-1 max, or if anything, trade a cash account and don't even use margin. That's a great thing to do as a starter. You don't need to have a margin account. Keep that in mind. Second thing I want you to avoid is look at the fee structure, especially a lot of these brokers that allow you to short these really hard to borrow stocks. I know it's attractive to short these penny stocks, these big runners. You see some big percent gains posted out there, and it's a very viable strategy to short these supernovas, these big gainers that fall apart the same day. But something that you need to do is look at the fee structure. I've talked to a lot of short sellers. Actually, I talked to a guy that was dabbling into it. He mentioned to me he was finding some success. He made almost $10,000 a month as a new trader shorting, and he paid almost $4,000 in fees in that month. Now, he still had a good month, but think about that. That's a lot of money just to be paying to the broker for the privilege, quote unquote privilege, to short these stocks. And it happens on the long side, okay? Don't be afraid to negotiate. One of the things you have to focus on is being very disciplined and focused. So don't just sign up with a broker and not look at the fees. Know what you're paying and review it. Then the last thing that I want you to keep an eye out for, and this is something that I see some traders get caught up in, and that is not allowing specific order types or specific times to trade. You don't want to avoid, you do want to avoid a broker that say only allows market orders. You need to use limit orders in these stocks. And the simple fact is, if you're under the PDT, you're going to be overnighting trades. You need to be able to exit your positions in pre-market or after hours. Now, as a new trader, I recommend avoiding pre-market and after hours for new positions. You're just looking to exit, okay? Try to avoid pre-market and after hours trading unless your news comes out and a position you're in is going against you. But if you can't get out and after hours or pre-market, things can get really bad once the market opens up. So look for that. Make sure you can do limit orders. Make sure you can do stop limit orders. Make sure you can do one cancels the other. A lot of these, I wouldn't call exotic, but advanced order types, and make sure you can trade in pre and post market. Thanks everyone. Look out for those brokers. Be diligent. Okay, look for these fees. Make sure you know, buyer beware. Make sure you research and find a good broker. Next, be sure to comment below. Let me know. Have you been burned by a broker? Have you gotten to the end of the month, thought you had a great month, and then looked at your fees and were like, whoa? Or leave a question below. We'd love to answer every one of your questions. And be sure to subscribe and ring that bell. And I look forward to seeing you on the next live video. Ring that bell. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.